Welcome to Illuminati Silver's Inner Sanctum, where we tell you the truth about precious metals, economics, and politics. Today is Friday the 12th of June 2019, and we're continuing our report from the YouTube video we produced yesterday, announcing that the Dow Jones hit its all-time record high, and it has even continued upwards today. In this video, we briefly look at the reasons as to why, and how we at Illuminati Silver were confident, despite the stock market falls at the beginning of the year, that we were going to see previous highs reached, if not surpassed. In yesterday's YouTube video, we were critical of the pumpers and doom and gloom merchants who have been, really since 2008 and certainly more so in recent years, declaring another stock market crash, the worst ever seen. Yet, at the same time, these very people are stating that gold and silver prices will rocket to the moon because the Fed and central banks around the world will have no option but to reduce interest rates and eventually move into an aggressive program of quantitative easing. Now, anyone who has studied economics to university level and beyond will know that in general terms, when interest rates are low, stocks rise. Why? Because the cost of borrowing for companies is lower. They can undertake expansive investment programs cheaply and take advantage of what usually, at the same time, is a boom in consumer borrowing. People borrow more money when interest rates are low than they do when they are high, and the risk-reward ratio is that much lower. And so more people are tempted into this scenario. Now, it's not rocket science, is it? Yet these pumpers are saying markets are going to crash despite this lower interest rate scenario. Now, they would be right if the Fed and other central banks refused to lower rates in the face of an economic slowdown. We saw only 7 months ago what happened to markets when the Fed raised rates in December. They fell dramatically. Now, with the prospect of lower rates and possibly a rate cut as soon as this month, stocks are on a tear, and this momentum will continue until the markets believe that the Fed will cut rates no more, or are slower in reducing rates than the traders would like. Now, we admit it's not all as simple as this, as we have to take into account corporate earnings, existing order books, and legislative and political factors. But as far as the US is concerned, you have a president who has brought in considerable tax cuts, have reduced legislative burdens on business, and is calling for even lower rates. After all, he has an election to fight next year. With this in mind, you can see how we are so dismissive of all of those who are predicting an imminent collapse, with the latest prophecy being the 5th of August 2019. Now, whilst we at Illuminati Silver actually believe that the Fed should not reduce rates until at least September, it does appear from Jerome Powell's comments this week that a 0.25% cut is indeed likely this month, and more on the near-term horizon. At the time of writing, the Dow Jones stands at 27,332, nearly 300 points higher than it was when we produced yesterday's video, where we predicted to not be surprised to see a 28,000 Dow anytime soon. Longer term, this of course has consequences, and they will eventually be stock market retrenchment. But with a tailwind in favour of lower rates, central banks generally providing cheaper money, and governments more infrastructure spending, providing the US can avoid a military conflict with Iran and come to a satisfactory deal with China, then stocks will rise further, and even possibly into 2020. It's certainly what the president wants to happen, And the Fed can, at 2.5% Fed funds rate, allow for 10 interest rate cuts of 0.25% between now and the end of 2020, if necessary. We must also bear in mind that unless there is an economic reset, the world, and particularly the Western world, will now face a very different financial future compared with the past, where low and in some cases negative interest rates will be the norm. We are often asked, how high can a country's national debt rise to? Well, our answer is simple: until it reaches the level at which that country cannot afford the interest payments. Not the principal, but the interest payments. With the US debt clock showing a figure just shy of 22.5 trillion, there is never any hope of a complete capital repayment. Equally, the ability to afford the interest payments is also determined in large measure by the level of interest rates, and it is for this reason why the world is unlikely to see rates much above 3%, certainly in the US, matching envisaged GDP growth rates, and in most cases, and quite often, lower levels. We shall be providing a more in-depth analysis once the next FOMC announcement is out of the way later this month, and the impact we believe this will have on gold and silver prices. Disclaimer: Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.